Hello legends, good to see you're here. Thanks for tuning in for today's video. We'll be looking at Grab Holdings, ticker symbol AGC, soon to be changed to Grab after the SPAC merger. In this video, I'll be covering 7 major aspects. Number 1, what does a company do? Number 2, revenue streams. Number 3, who uses the services? Number 4, market size and opportunities. Number 5, potential risk and competition. Number 6, financials. Finally, valuation and final thoughts. So grab your popcorn and get ready for a ride. Now, what does a company do? Just like when you are getting to know a new friend, you want to know his or her name, what he or she does, etc. Likewise, it's the same for researching a company. To sum it up, Grab is essentially the C super app. Imagine you're hungry right now and you're lazy to cook. So you would then call for Grab food for your precious little tummy. So yummy. Now, imagine you are late for your job interview. Oh, heck no.
No, God! No, God, please, no!
You would call for Grab ride hailing to zoom you to your job interview location. If you need to deliver a parcel or if you want to get something delivered, you will use the Grab delivery services to help solve your problems. Side note, you can also buy groceries from the very own Grab Mart. Aside from that, let's say you need help in financing and choosing the insurance policies for yourself. You can use the Grab Digital Bank or FinTech services, which is available on the Grab Super App ecosystem. Just a bit of history, Grab started ride-hailing service in Malaysia back in 2012. Ever since then, it has been a wave of rapid expansion to other Southeast Asia countries. Not only that, they also started to offer a lot more services other than ride-hailing, just as what you have seen earlier on. Another worthy act of theirs was that they punched Uber out of the C market. Uber therefore agreed to give Grab their C business unit. In doing so, Uber owns about 20% of Grab Holdings. What are their revenue streams? As of now, Grab segments into 3 main revenue streams. Number 1, the ride-hailing commission revenue, which is the commission fee that they earn based on the total gross merchandise volume, GMV. Number 2, the delivery commission revenue that they earn, which is a commission fee based on the gross merchandise volume as well. Third, so FinTech transaction commission revenue, which is the commission fee that they earn based on the total processing volume, in short, TPV. Now, who uses their products or services? Speaking of who uses the app, it will be the average Joe users as well as the busy white-collar people who use their ride-hailing plus delivery plus fintech services for their day-to-day problems. Market size and opportunity. The target market has always been at C, with an approximately 800 million population and rising mobile phone penetration rate. The total addressable market, or TAM, is seen to be increasing rapidly. Their Euromonitor report also shows that the C countries generally still have low penetration rates in terms of online food delivery, on-demand mobility, and digital fintech services. It's also worth noting that Grab currently is the market leader in the C market. Grab recently has also been selected for a digital bank license by Monetary Authority Singapore, MAS, basically the big central bank of Singapore. The insight here is that this gives a huge potential boost for their fintech services offerings in the long run. Potential risks and competitors. Of course, every business has got risks and competitors, unless we are talking about the one and only diamond cartel, which you know they practically monopolized and dominated the entire diamond industry on a worldwide scale. There's another Southeast Asia powerhouse company called Gojek that offers similar services as Grab, which is about to be merged with Tokopedia, both of which are the Indonesia powerhouse internet companies that have large market shares in the Indonesia market, by itself which is the largest country in the entire Southeast Asia. Gojek has also expanded to other Southeast Asia countries, using the same hyper-localization strategy as Grab did earlier on, just to grab greater market shares. Another risk would be Grab's speed of executing their strategies as well as the accuracy of Grab's hyper-localization strategy in grabbing market shares, as the Southeast Asia market is a fragmented market with multiple languages and cultures, customs, regulations, and so on. Grab's business model, and similarly Gojek as well, rely on winning the number one market share in order to establish a position to be profitable in the long run. Up next, financials, the juicy financials component. So let's take a look at the tabular data. In terms of the delivery segment GMV, clearly it is an impressive past growth record. It's a whopping 203% CAGR growth. The COVID 2020 tailwind did help them a lot, as many people would prefer to buy groceries and have them delivered due to COVID lockdown. In terms of the mobility segment GMV, it's an impressive past growth record nonetheless, despite a dip in the 2020 due to the COVID effect on ridership. I do have concerns about the projections, as right now we are already in the 2021 and there's no strong sign of improvement yet due to the recent third wave of COVID in Malaysia and many other countries as well. For as long as the vaccination speed is not up to date, I have no reason to believe in strong projections in the mobility segment. In terms of their financial services segment, they have achieved a TPV growth of 102% CAGR, an impressive feat. This segment is expected to not be EBITDA positive at least for the next several years, as there are a lot of fintech players in the local Malaysia market and the regional markets as well, with the likes of Boost, Shopee from C Limited, Gojek, and many more. Finally, valuation and final thoughts. 3 components to the valuation. Let's dissect the delivery segment first. 2020 GMV of about $5.5 billion. 2020 revenue of about $0.8 billion, which is roughly 15% of GMV. Assuming 30% year-over-year GMV growth, at 2024 there will be $15.7 billion, which gives $2.4 billion of revenue. Given that Grab estimates EBITDA for the delivery segment to be roughly 10% of the delivery revenue, this gives a 2024 EBITDA of about $0.24 billion. Let's look at the mobility segment itself. 2020 GMV of $3.2 billion and 2020 revenue of $0.5 billion, which is roughly 15% of GMV. Considering that Grab already dominated, not discounting Gojek, but many other C countries in terms of ride-hailing, I'll adjust the GMV growth to be perhaps maybe 20% year over year. In 2024, the GMV would be roughly $6.6 billion, with revenue of 20% of GMV as economy scaling effect kicks in, making it $1.3 billion of revenue. The EBITDA to be roughly 60% of mobility revenue, then 2024 EBITDA to be roughly $0.7 billion. Let's look at the financial services segment. 2020 TPV of about $8.9 billion, with 2020 revenue of $0.2 billion, roughly 2.2% of TPV. Considering a GMV year-over-year growth of 25%, 2024 GMV of about $21.7 billion. Assuming revenue can get up to 5% of GMV, this translates to 2024 revenue of $1.1 billion. Assuming that Grab can achieve an EBITDA margin of roughly 10%, 2024 EBITDA would be roughly $0.11 billion. Summing all up, by 2024, there will be a total EBITDA of roughly $1.13 billion. Given that there's still a lot of growth runway, giving it a 40x EBITDA multiple, then the valuation would be around $40.8 billion. At the current valuation of $40 billion as proposed by AGC, I'll pass. Considering another CE powerhouse, Gojek, merging together with Tokopedia as well as other local and regional players, I'll be skeptical of Grab's high growth future projections. Everyone is practically doing the same thing. I could be wrong. Therefore, if you have strong reasons to believe so, please comment down your thoughts below. I'll be happy to hear them out. So thank you for riding this journey with me. Make sure you smash that like button and comment down your thoughts below, and make sure you click the subscribe button as well. See you in the next one.